some leaders have an ability to influence staff members to break the law, then justify inappropriate actions with promises to make up for bad reporting, redirect the moral compass of the company, and make their employees feel guilty or threatened if they do not want to participate. Corporate accountants operate as the conscience of their companies. This is a story of how manipulation and greed created a culture of dishonesty that cost stakeholders $2.8 billion and left many wondering how this could have happened and why some key players went unpunished for their crimes. HealthSouth's corporation scandal begins with the history of the company. This was a startup with a guy in a suit, with a phone, in a room, with no money, according to founder and CEO Richard Scrushy. Overnight, his superior business strategy catapulted the company from basic startup to a quickly growing medical provider. From their beginnings in the outpatient medical care, they became leaders in sports medicine by purchasing rehabilitation centers, and they even had celebrity clients like Michael Jordan. By the time the company put out their initial public offering, they quickly grew to be about $20 per share. Scrushy hired Aaron Beam to join the company as CFO and gave him 100,000 shares for $5,000. That's 5 cents per share. Clearly, senior leadership had the most to gain from the company's growth. Overnight, they were soon literally living like rock stars. They became used to a certain lifestyle, with mansions, luxury vehicles, yachts, status treatment from locals like free meals. Scrushy even built public buildings with his name on them all around town. The company purchased about a dozen jet airplanes. But the business life cycle was catching up with them, and they kept asking themselves, how do we keep the company growing? This is the pattern of the business cycle, from startup to growth and then maturity. Growth cannot go on forever. At some point, the business will slow down, and the company must change strategies to match the market or risk becoming a going concern. Richard Scrushy did not want the party to end. That's why he pressured his CFOs to lie to Wall Street. In 1996, the company had a bad quarter, and they needed to report a loss. Aaron Beam went to Scrushy's office, and once he told him, Scrushy replied, "You guys won't be rock stars anymore." He went on to say, "You know how to fix these numbers. Now go back to your offices and do it." From interviews on YouTube, Beam describes how Scrushy sat him down later and went over a plan. Scrushy wanted to report bad numbers now, but fix them later by moving around other funds in a way that made Beam feel okay about going along with the fraud. Beam also gave several reasons why he went along with it. He was afraid of making his boss angry. He wanted him to like him. He wanted to be supportive. And he also knew that Scrushy was carrying a gun in his briefcase, and he was afraid that the man was unstable. But ultimately, Beam says Scrushy just had a Spingolly quality to convince his followers to go along with whatever crazy scheme he wanted done. Beam said Scrushy looked them all in the eye and told them if he didn't know what their game plan was, but if they ever got caught, Scrushy was going to deny everything. Aaron Beam went home that night and figured out how they were going to run a basic scheme to simply overcapitalize the assets on the balance sheet. And basically, they're journal entries to debit assets, credit revenue. From 1996 to 2002, that fraud eventually transitioned into a very complex shell game to overstate revenues to match Wall Street's expectations, and sometimes they even exceeded them. Ultimately, the balance sheet ended up with massive amounts of cash that did not exist. Wikipedia reports that the fraud continued for 7 years. In certain fiscal years, the company's income was overstated by as much as 4,700%. At one point, the company's corporate taxes, which were based on the fraudulent earnings, were higher than its actual earnings. So I had to ask myself, what does 4,700% of inflation look like? This is an approximation for every $1,000 It's a lot of money. That's almost $6,000. It's incredible. So how did they get caught? Scrushy had some stock options that were expiring and he needed to sell. He went on television in 2002 and reported bullish earnings for the next quarter. 5 days later, he sold his stock options for $30 per share. This alerted the SEC to begin investigating the company and led to a federal investigation of the fraud. On June 28, 2005, Scrushy was found not guilty by a jury for his part in the scandal. Despite a questionable appearance on 60 Minutes, he played his public relations to show himself as a family man and denied all charges successfully. In 2006, he was convicted for a different crime, paying the former governor of Alabama $500,000 in bribes. He was sentenced to 82 months in prison and only served about 70. He was sued by the company in 2009 in order to repay $2.8 billion. In perspective, this is about 10 times what he actually made as CEO of the company, which was $267 million, during the time the fraud was going on between 1996 and 2002. In comparison, the CFO, Aaron Beam, only served 3 months because he complied with the investigation. What makes us blindly follow our leaders? There are many reasons why some people might feel guilty or obligated to follow directions from their managers, even when it is clear management is asking for something dishonest. When that happens, the accountant's duty is to refuse to participate in deceitful reporting practices. They should back up their reasons with citations to the standards and carefully examine the facts. In minor cases, management should respond appropriately and crisis is averted. However, in extreme cases, accountants should resign and potentially blow the whistle. Thank you for watching. This video was recorded for educational purposes.